This is Cece from Options AI. Welcome back. We've got Netflix reporting after the close. It, of course, is the first of the mega cap tech companies in the US to report this season. It's always a fun one, especially at this elevated stock price. And the stock's had a huge run this year up into earnings. It's backed off a little bit over the last couple of weeks, and that actually leads us to the next thing, which is the expected move. The expected move is about 6%. And if you look, oftentimes these expected moves are informed by recent technical levels. And it does make sense on this chart. We're looking at the 3-month chart. And the expected move to the upside is basically right around these early July highs. This expected move to the downside, a little less clear with this huge run up, but it is catching the bottom of a bunch of these candles that go back into June before this move higher. So it's a little bit range bound. It is traded in about a 150 point range, which is a lot, but it's a range nonetheless. And, so one of the first things we always look, obviously, with expected moves, stocks tend to stay at or within their expected moves on earnings about 65% of the time, let's call it. So we always like to look at the neutral setup for potentially capturing that income and selling that move. With the idea that with defining risk on that 30 to 35% of the time when you are wrong and it moves outside of that move, it tends to do it by a lot. And so you don't want unlimited risk beyond those levels. So we're going to pull up the iron condor here, expiring on Friday. And we see it's catching, you can see that line of the break evens. It's catching those areas that we just spoke about. Zooming in, if you were a little bit nervous to the upside, this break even's catching this to the upside, you could always bump this a little higher by a few strikes without drastically changing your risk reward. Same thing to the downside. If you wanted a little bit more room, you could bump the put side of this trade slightly lower. Make sure you caught the bottom of these candles perhaps. For right now, let's just look at it the way it is. And this is selling a 1337.5 call and selling the 1190 put. Those are your short strikes. That's right here. The other interesting thing here is this risk reward. It's almost 50-50 risk reward, which you don't see very often. And so that allows you, if you wanted to go a little bit wider, and let's actually do that. Let's come in here and let's just make this a bit wider. And we're going to see this risk reward changing. Now we're under that 200 to 300. Let's pull it in one. We get that risking 300 to make 200. We've gone a little bit wider in our strikes. Now it's the 1340 call and the 1185 put, and we're clear of that recent high to the upside. And then on that downside, we're basically at the bottom of these candles you see back in late May, early June. So pretty good risk reward for that much of movement. Now Netflix, when it does move, when it has a surprise reaction on earnings, it does tend to move a lot. So defining risk is extremely important here. We're talking about that expected move. You can see on this earnings tab here, we've got the 7% move last earnings. We've got a 10% move. We've got an 11% move. But then there's times barely moved here last July. And then, you see some of these big moves in the past, like 16%. So that's the risk of if it does make a big move, and that therefore we're defining risk and we're looking for one of those, 5% or less moves on a condor.